Hey, what is up everyone? It's David here. In this video, I want to do a portfolio update since many of you have asked me to do that, and also talk a little bit about how I think about managing my portfolio during a downturn. And also there are quite a few questions that I haven't had time to address. So I want to take the time to answer some of those questions towards the end of this video. As usual, no, this video is not financial advice or recommendation to do anything. I've left timestamps in the description box below, so feel free to jump ahead to whichever section that interests you the most. So I want to start off with a general portfolio update. I'm currently sitting at 194,000 Australian dollars with 12,000 in cash. And year to date, my portfolio is down approximately 13%. And the main reason why it's not down further is mostly because one, my ETFs are cushioning some of the blow. And two, I've actually invested more during this period to bring down my cost basis for my high conviction positions. So it just looks like I have lost less, if you will. In terms of the percentage breakdown of my portfolio, I didn't include the crypto in this number right here. Crypto is approximately $12,000, and I'll go into detail in just a second. I have approximately 6% in cash, a little bit over half in more mature companies and ETFs. So I just call them value stocks. And then approximately 36% in high growth businesses. Now, I put employee options over here as well. It's mostly because this is going to make up a big percentage of my portfolio moving forward. Moving forward being a few years down the track because they take time to vest. I will talk more about that in the future for my channel, but I do anticipate that these employee options is going to play a big part in my financial independence journey in the company I'm currently working at. Now, just to dig into the growth portfolio a little bit more, some of these names you're probably not surprised by. I've consolidated quite a few of them, so then I have less, I'm holding less positions, if you will. I've also initiated new positions in Coinbase and also Nvidia. You have to form your own thesis yourself, but the general thinking is institutional ownership in crypto and basically the need for semiconductors, especially in this age of leveraging more artificial intelligence computing. I've added more, probably like almost double or even more than double my position in Shopify, Twilio as they came down further. And a lot of you have actually asked, what am I doing with my Asia position? And the truth is that Asia is my diversification strategy in terms of having exposure outside of US and also Australia. There are tons of questions around like what's happening to Asia, it keeps tanking. Well, there's a lot of reason why it's bad. The real estate situation isn't too good in China. Slower income growth for the country, also not very good. And some of the tech giants recently didn't report earnings that the market like. So sentiment's pretty bad in this ETF at the moment. I'm okay with it. So I'm going to keep it as is unless there's a better opportunity out there that I can, take this money and invest it elsewhere, then I will do that. But for now, I'm just going to keep it as is. For my more mature company portfolio, Disney, Amazon, Micron, I really love Disney. I use the service myself, Disney Plus that is. Haven't been to a Disney park, which I will in hopefully very, very soon. Amazon is a company that I invested in ages ago and people are discounting them for their e-commerce presence, but AWS is growing so quickly. The only thing in this portfolio that I'm willing to swap out or reallocate the capital is Micron. Micron is a semiconductors play in the memory space. For my own memory's sake, in the future, I want to hold less positions and more concentrated positions. So this is a position that I'm willing to give up in the future so that I can reallocate that capital elsewhere. Everything else is pretty standard. Wax is a listed investment company. Argo is essentially my version of the Australian index fund, and VTS is the global US market. So these are my ETFs that make up a big portion of this, I guess, more mature portfolio right here. So when it comes to my crypto portfolio, I've kept it very simple. I have Bitcoin, Ethereum, and Solana. And Solana makes up approximately 30% of that portfolio, Ethereum approximately 30, getting close to 30, and Bitcoin is approximately 40%. I'm currently dollar cost averaging every single day into these three crypto assets. It's my own choice. It's the main reason for this is just the price of these crypto assets got absolutely destroyed. And some of you asked, how come I'm not investing in gold, but instead investing in crypto? For me, I have a very long investment horizon. So it makes more sense for me to look at where the world is heading towards and allocate capital towards that instead of where the world once was. And plus, Solana and Ethereum, these are more like infrastructure plays. And I know that there's some concerns around Solana being more centralized and VC backed, but I don't really have to pick which is going to win. Either Ethereum or Solana is going to win. I have both. and I'm going to keep dollar cost averaging into them both. So with my portfolio update out of the way, I'll talk a little bit about how I think about managing my portfolio in a bad time. Where I like to start is I like to start from my investing system and then zoom in into what I'm actually doing in my own portfolio. So this process, I actually talked about in detail in this video right here, how I invest more than $2,000 per month, what my system looks like when I'm investing $1,000 to $2,000 to more than that. So majority of the income, some of it comes from side hustle, some of it comes from full-time. A portion of that will be to taxes. And then this is my capital allocation percentage, 10% to external help so that I can get my time back, so that I can invest in my skills. So then my skills, I'll become more valuable in the workplace, and therefore my full-time income will go up or my side hustle will go up in terms of the money that I generate. And 60 to 70% of it will go into my own portfolio. I'll zoom into this in just a second, and 10% will be allocated to living expenses. Now these percentages will change over time, but it's roughly that number. So just zooming into how I allocate resources every single month, I have approximately 10 to 20% going into cash, just to make sure I have enough liquidity to capitalize on opportunities if they do come up. I allocate approximately 35% into ETFs, and I'm talking about broad-based market ETFs like Australian or like US market-based, not theme-based. So theme-based would be like robotics or esports. That would be considered as theme-based. I'm talking about just very general market-based ETFs. And I also allocate approximately 30%, depending on the opportunity, into long-term compounders. So these are scaling high growth companies that have a long runway to grow. Like for example, Tesla will be considered as a long-term compounder. Shopify, Twilio, Snowflake, these are just high quality companies that got absolutely destroyed when the market is bad. And I think when the market is bad, that's our opportunity to get great bargains for great businesses. Crypto, that's something that I've added a little bit more focus in, just because they had a great run, and earlier this year they got absolutely destroyed, and I see that as an opportunity. So instead of me trying to time the market, I just dollar cost average into majority of these where possible. So I keep it pretty simple. I try not to overcomplicate things and try and basically time the market top or bottom. So I want to zoom out a little bit to talk about the general principles of managing my portfolio in a bad time. There are mainly 4 steps, and this is just a simplified version of a collection of my own investing experience and also the books I've read. You can take inspiration from that, but it's probably better for you to develop your own principles. The first thing I always do is I need to check conviction in all my positions. Why am I invested? What's the balance sheet like? What's the management team like? What is the market size like? Is it growing? Is it declining? I have talked a lot about that in this video right here, so feel free to check out that video after this one. The second thing is I like to clean out positions that I don't want to hold long term. So if I ask myself, am I willing to hold on to these positions for longer than 5 years? And if my answer isn't a straight fuck yes, then I think I have my answer to the question. And I think it's also okay to change your mind very frequently as new information show up. So I have this philosophy of like strong opinions loosely held. The third thing is I like to hold a certain percentage in cash always, just because when there's an opportunity, I just need the liquidity to be able to capitalize on those. And the fourth thing is I will continue to stick to my system no matter the times are good or bad. And by my investing system, I am referring to this, where I'm investing a certain amount into my skills, certain amount into side hustle help. And that brings me to things I do to improve the quality of my decision making. Because when times are bad, and if I can just make a few very good decisions, it will have a huge benefit to my portfolio on the longer term basis. So there's 2 main things I do to improve my quality of decision making. One, I stop looking at my portfolio so much, because it's kind of like playing sports, right? There's no point looking at the scoreboard all the time. You're not really going to change your outcome by looking at the scoreboard. And for me, spending less time in my portfolio, I have more mental clarity to make a really good decision. Otherwise, I'll be trapped in this like, oh, my portfolio is down 20% in the beginning, or when the market opens, and then when the market closes, I'm up 10%. Like, that doesn't really help to improve my decision making. And the second thing is I need to continue to grow my ability to generate income, because if I can generate more income, that means that the short-term fluctuations doesn't really matter to me all that much, because I can invest more when times are bad. Those 2 things are the key pillars that have allow me to invest more when times are bad and for me to stay sane when times are bad. If you have any questions in terms of how I allocate resources or the general principles of me managing my portfolio in a bad time, just let me know in the comment section below. So there's a few questions that I would love to answer, and Angelo asked, we need an update video on ComSec, Spaceship and Raise. I agree, that is coming soon, just bear with me. Jason asked, would I consider doing a video on franking credits? I thought I did, so please check some of my earlier videos on dividends. I am pretty sure I've done one on that. And career break, how I plan to maximize returns and dividends. I'll figure that out when I think about taking the career break. It's not quite on my radar right now. It's the secret behind hair growth. To be honest, happy relationships, looking at your portfolio less, and just eating well, exercise well. But to tell you the truth, I always had great hair. And that's not to boast, but no, I didn't get a hair transplant. And Reggie, we should have just played along because that would have been funny. Yeah, I just stopped shaving my head and yeah, I guess let my hair show itself. But I do think that I'm doing this because there's going to be a big change in my life later this year, hopefully. And I want to do that first, and then I might go back to shaving my head. Who knows? So Paul asks, hey mate, what strategy can you use to beat the average annual return of 10% per year on the ASX? I think this is harder than what most people make it to be. Like for me, I haven't done that consistently with my portfolio just yet. My performance tend to like fluctuate between 5 to like 15% annually. So then right now I'm sitting on 8, and before the market like basically tanked, I was sitting on like 12 to 15. So I haven't figured that out yet. So maybe in a few more years, then we can talk about what exactly is a really good strategy for like retail investors to approach that. But what I can say is that I've done this quite well with my professional career in terms of growing my income. I've done that really well. I haven't done the portfolio size things quite well. So I can probably speak more to the professional side, but not the investing side just yet. Stockbroker do I use? I use CNC and also Stake. I am considering using Pella as a way to automate some of my investing systems. So I'll keep you posted on that. I'll probably do a video on that when I start changing the stockbrokers I use. But I'm pretty happy with what I have at the moment. No, I haven't stopped using Stake. It's, yeah, very, very happy with it. Ben asks, would you agree that investing in ETFs that focus on high dividend could be a good option as opposed? No, I do not agree with that, because ETFs with high dividend stocks generally pick out companies that are in their dying phase. So then they're dishing out high dividends in order to attract investors. That's generally not a very good way to think about building and investing like a dividend portfolio. So for me, I don't agree with that. Did I quit my job yet? Nope, I still have it. Actually just got recruited back into a startup. So if you guys are interested to connect with me on LinkedIn, feel free to do that. Like, I'm doing quite a few things professionally, quite a few cool things professionally right now. Ziz asked, did I stop putting my portfolio worth on your videos because it went down heaps? Well, I talked about it. It went down approximately 13%. I think the main reason why I did that is mostly because I need mental clarity. And when I do portfolio updates on a weekly basis, I'm forcing myself to look at the portfolio. That's like forcing myself to reduce the quality of my decision making over time. I don't necessarily think that's a good thing to do, but that's just me though. Like maybe when I become a more mature investor, then I will do maybe more of that. But for now, I will do updates via community posts. So that way it's a bit easier for everyone to digest. Until next time, my name is David, and Otto will always do the honors, and see you very, very soon.